Right, so recording is in progress. So today we're going to look at R2R, which stands for rent to rent, and R2SA, which stands for rent to serviced accommodation. I'm going to give a little spoiler alert at the very beginning. These strategies can be good, but they're not always as great as people make them out to be. Because in reality, obviously, there's a lot of people doing different training and selling courses and doing events. And one of the big attractors on these type of events is how you can get into property with no money down, get massive income from doing rent to rent or rent to serviced accommodation. There can be benefits. There can be some good ways of starting making some income from property using these strategies, but it's needed to be at the same time very careful, cautious. Careful and cautious doesn't mean like spending months and months analyzing something and never starting. It's more a question of thinking, yeah, this could be a good deal, but looking at it and looking at everything and deciding either, yes, it's good, I'm going to go for it, or and go for it like sort of straight away, or no, it's not a great deal. There's too many risks and too many potential problems. And we're going to be looking at some of the benefits and some of the problems as we go forward. So this is what we're going to be looking at over the next probably 40 or so minutes. So introduction, benefits, a bit about the legal framework, compliance requirements, and then, yeah, how it works, how to get started, some of the challenges, some of the problems, and then we're going to look at a little bit more details and also some of the potential problems and how to avoid them. Feel free to, as we like, ask any questions as we're going along. And yeah, let's make it a little interactive if anyone's got any questions. So what is R2R and what is R2SA? So rent to rent, in fact, could also include rent to serviced accommodation, but rent to serviced accommodation is a little bit more specific. So rent to rent is when a person, typically someone who's getting into property, wants to make some money from property, agrees with the owner of a property to rent the property, so paying a fixed monthly amount to the landlord, to the owner of the property, to rent it, with the agreement from the landlord that they can sublet, so basically rent to tenants. Typically, if it's rent to rent, it's letting out to multiple tenants, so renting out rooms. So the investor will be paying the landlord a fixed amount every month. The investor will be paying for the utilities, for the council tax and internet, water, and different things. Then we'll be finding the tenants to occupy individual rooms, collecting the rent each month or each week from the tenants, making sure that everything is compliant, dealing with any maintenance issues, dealing with problems with tenants when it's like multiple occupation. You can have tenants that are, have problems with each other, and sometimes it's needed to get involved in that. And the difference between what the tenants are paying and then taking away the different expenses, taking away obviously the money to pay to the landlord every month. The difference for that is a profit for the property investor. So rent to rent, and then like a subclass of rent to rent is specifically, rather than renting to individual rooms on a long term, medium or long term basis, rent to serviced accommodation is when someone is renting for example, a flat or a house, and then renting it out on Airbnb, booking.com for short-term accommodation. It could be for people on holiday. If it's in a city, it could be people coming in visiting at weekends, during the week, and corporate stays, which could be the contractors or people on business. Serviced accommodation is not necessarily only like for 1 or 2 nights at a time. It's possible for it to be sometimes several weeks, potentially a few months at a time. And we'll see that when we talk a little bit about doing this in London. We've got the 90-day rule that we speak about, which means that we can't do short-term lets for more than 90 days per year. And the remainder of the time we have to find or we should be finding lets that are 90 days or longer. Both of these strategies require minimal upfront investment. Typically, it's paying a deposit to the landlord. Sometimes it's possible to agree not to pay a deposit if we've got an established business doing it. In the case of typically, if it's an HMO, it could well already have the furniture in. If it's serviced accommodation, it'll be needed to set it up probably to quite a good standard. Sometimes it might already be set up. So it isn't no upfront investment. There is some upfront investment, could be a few £1,000s each time. And as we'll see, if you're doing it yourself, so you're finding and direct to landlord finding the opportunity, that's fine. If you're using a sourcing agent to do that, then there's sourcing fees on top. So it is minimal investment as opposed to buying a property, but it's not nothing. You need to carefully take into account those costs and understand what the real return on investment is. So that's an introduction to what it is. So we'll start with the benefits, and then we'll go on to some of the not benefits. So potentially high monthly cash flow. Potentially we're talking about a minimum of £500 per month cash flow. Cash flow is the end money that we have per month once we paid all the bills. The cash flow, obviously, we're also using to pay off our initial investment. So if we paid £5,000 to get a property up and running, and we've got 500 of cash flow, that means we're going to wait 10 months before we break even and start making a profit. But there is some cases that can be more than that. Second benefit is if we're wanting to get started in property, we don't have a massive amount of capital to actually buy something, we can use rent to rent or rent to serviced accommodation strategy to start accumulating some income that we're putting in a pot, and later going to be using that to buy our first property. And yeah, scaling possibilities to rapidly. You haven't got to wait as long as you've got enough money for the deposits and getting set up. You haven't got to wait to like refinance to be able to get onto the next property. Or if you're starting it, someone's starting it as a side hustle, then if there's already money coming in, for example, from business or from work income, and it's possible to save some of that and use that to get like another rent to rent, possible to scale relatively fast. And also if someone's doing it as a business, once maybe there's 2 or 3 properties and there's landlords that are already happy with the service, it's sometimes possible then to like get recommended from existing landlords and yeah, sometimes take on properties without deposit. So those some of the benefits. Some of the downsides to rent, and it's important to think about those and to have those in contrast with the advantages. One of the things that we're really like paying attention to and focusing on in the training and in the education is the good and the bad, and really thinking about everything and not just saying this is great, we can pay us some money, we can find you some rent properties. There are unfortunately a lot of people saying that, but think about both the positive and the negative. So on to the some of the downsides or things to really bear in mind. Rent to serviced accommodation requires quite intensive management. It's not just a question of paying the deposit in the case of HMOs, putting a couple of adverts on spare rooms, getting some tenants and leaving them to it. Or in the case of serviced accommodation, buying a few quilts and putting an advert on Airbnb. There's a lot of management involved, takes quite a lot of time. If you're doing it yourself, then that means phone calls at 9 or 10 o'clock in the evening, dealing with guests that are expecting to arrive at a hotel, but in reality, it's a house and they don't know how to get in, and it's needed to help them. So quite intensive management. It is possible to outsource the management to a management company. There are letting agents that will look after HMO rooms. There are serviced accommodation management companies, but these companies obviously are charging a management fee. Typically for an HMO, it's going to be 15%, serviced accommodation between 15 and 20%. And if you factor this in and you're using management, then the profits are going to be significantly reduced, and it can end up not being worth it. So for someone who's got, like, let's say, the time and the energy to do this, it can be a way of making reasonably fast some profit from property. So that's the first downside, intensive management. Second downside, risk of financial loss due to tenant issues. What this can mean in the case of, for example, an HMO tenant stops paying, you're still paying the rent to the landlord, or in the case of serviced accommodation, if it's like off season or market for contractors, for example, dries up a bit because there's no major construction projects, possible to end up with a underperforming serviced accommodation unit, and instead of getting the profit, the person with the investor is ending up paying more each month to the owner and utilities than getting from the income. So needed to carefully look at the figures and not for granted what you think you might get from it, but to really analyze and understand what the what the income can be. Third downside is potential compliance challenges. So in the case of a rent to rent for an HMO, need to be on top of all the compliance rules, also properly checking tenants, and it's we're going to see this a little bit later, more challenging with the renters' rights bill, because when it's an HMO, each individual tenant has a an occupation contract or equivalent of the new equivalent of an AST, which basically gives them an almost unlimited right to stay in the property as long as they're paying. And if they don't pay, it's quite complicated and time consuming to evict them. So all this, and to be able to deal with problems, is needed to be sure that everything is fully compliant, and all the safe fire safety, electrical safety, gas safety, everything is up to standard. deposits protected and everything that needs to be done. And then the fourth downside, which is it's like sort of okay to get started, but there's no, in this case with rent to rent, the investor is controlling a property, but is not owning it. So as the price of the property, the value of the property increases, that benefit is for the owner. There's no benefit for the investor on that. So the income is limited to the cash flow alone. So generally, either rent to rent becomes a full-time business, just like any other business, or it starts like as a side thing to start getting income, and then properly to get into property means buying property or creative deals like what we call like options to purchase, where we're controlling a property with the possibility of buying it at a later stage. So we've seen some of the upsides and some of the downsides to rent. Are there any questions at this point?
Just one, Trevor, from my side. So, um, kind of all makes sense, but is the key here then to find an arrangement, whether it's rent to rent or rent to SA, whether the margin is big enough to sustain some of these risks or mitigate some of these risks or even absorb to some degree, if you want to use a management company, the fees that they're charging. Is that the key to what makes a good rent
Yeah,
to rent
yeah,
deal, the rent to SA, is
yeah.
to make sure the
My
margin
take
is
in reality is using a management company um will eat up most of the profits.
okay.
And that if you want to do it to get income and get started in property because there's not enough money, for example, for deposits and things like that, or someone's got time and energy to deal with it and it's interesting to understand how things work, that's fine. Because, for example, in one of the areas that we operate, which is in South Wales, I've got a management company which is managing both HMOs. I'm managing our own serviced accommodation, and we're managing serviced accommodation for other investors. So on my own properties that we're managing, we're probably cash flowing between 500 and 1,000 pounds per month on properties that will be a 3 or 4 bedroom HMO. Probably similar on serviced accommodation. In the lean months in the winter, we might be making nothing and or a slight loss and getting like 1,000 a month in the summer. But if we take into account the management fees, it ends up being probably be 200 or 300 pounds per month. So is it worth it? It's more a question, is it worth it for the risk? Oh,
Yeah.
there's just one moment. I need a person here, which I'm going to add into the yeah, joining us now. Yeah, so I'm continue. Yeah, so yeah, using a management company, it's I would say there it's almost not exactly like investing in the stock exchange, but it's taking a bigger risk because there, when you got a management company, you're paying obviously the landlord, you're paying your utilities, you're paying the fee to the management company. So if you haven't got relatively high occupancy at the end of the day, you're probably not making any profit at all. But at the same time, if it works out well, if you end up, I'm going to say lucky, and you get like 90% occupancy over 6 months, it's like yeah, like you bought shares in a company that's um increasing a lot. So when it's like self-managed, the risks are making not um almost no profit, but at least you can organize it. If you're self-managing, you haven't got tenants, you'll make sure that the utilities are off and things like that, and you'll do your best. Because if it's a management company as well, they're going to be advertising multiple properties. and they're not going to be specifically they're not going to be doing something against your property. If you're self-managing it and you know that you and you like, even if you sometimes people are going to do like the housekeeping themselves if it's like quiet, and then it's fine to like undercut the prices because you know that the overheads are limited. But if you're a management company, you can't like undercut and make it negative for the owner. So does that answer your question of that, Sal?
Yeah, it does. Thanks, Trevor.
Yeah. Okay, we'll move on to the next part. So just a second. So yeah, legal framework and compliance. So doing rent to rent, it's not a question of a handshake with the landlord saying, I'll look after everything, it'll be fine. We need to have in place proper contracts, and we'll understand that there can be issues with those contracts. So we need to be really careful about the type of contract that we're doing, make sure we've checked everything. So as regards the compliance, we've got the contracts with the landlords, which can either be like lease agreements or management contracts, which give the investor the right to obviously manage the property, have either short-term accommodation or manage individual tenants on an HMO basis. And also, I think we'll probably touch on a little bit later, especially in the case of an HMO. When it's an HMO, if you've organizing a 3-year contract with the landlord and then renting it out to individual occupants, after 3 years, you can't suddenly say to these occupants, my contract with the landlord is finished, you have to leave now. You've got the very high likelihood that there's tenants still in the property. Who's responsible for them? Um, what is the issues? How is all this dealt with in the contract? And in reality, um, sometimes I'm helping people that are on the investor side, on the organizing the rent-to-rent contract to manage it. And sometimes I might be on the landlord side, because there might be a landlord investing in a property and thinks, yeah, it could be a good idea to do a rent-to-rent rather than manage it himself. But on that side also, the landlord needs to be properly protected. The landlord needs to be protected that if at the end of the rent-to-rent contract there are still occupants in there that, for example, maybe are not paying rent, then the person that has the management agreement must be somehow compensating for that, or an agreement of how that's going to be dealt with. So all this must be properly in the contracts. So we've got the contracts with the landlord. We've got the licensing requirements. So if we're in HMO, we might have got um, to be licensed. If it's a large HMO, then there's mandatory licensing. If it's small HMO, we might be in what's called an Article 4 area, which means we still have to have a license. And independent of licensing, we've also got, it's not like a specific separate line here. We've got the compliance as regards all the safety requirements. If it's HMO, we've got the fire doors, the fire alarms, the emergency lighting, all this stuff. If there's a on rent to rent, it's the person who's in reality there's joint responsibility, and that also has to be covered in the contract with the landlord because the person managing it is responsible for doing the monthly fire checks, the yeah, making sure everything is up to date and properly maintained. So we've got our licensing requirements. Then continuing with the legal framework and compliance, we've got tenant and guest agreements. So tenant agreements is if it's an HMO, having the properly done ASTs or the equivalent if it's in Wales or Scotland. and making sure everything's registered properly, all the right documentation has been given to the tenants, deposits have been protected, and that obviously if it's self-managed and if you're using an agent, they should be doing all that, but then that's eating the profits, and is it worth it? Insurance, there's insurance that's needed both on the side of the landlord. So people, an investor setting up a rent-to-rent agreement must make sure that the landlord has got adequate insurance, must make sure that the landlord has stated that if they have a mortgage, that their lender is happy with the fact that there's a rent-to-rent on it, and the person operating, so the investor operating the property, also needs to have the appropriate insurance. Obviously, all this we're just like touching on the surface of things that need to be covered. There will actually be more complete packages that give all these details, but it's not something that we can cover in 40 or 50 minutes. And then we've also got planning regulations. So it's needed to check that, yeah, if it's an HMO, it's got the appropriate planning. Because if, as a rent-to-rent, take on an agreement with the landlord, and then there's a planning enforcement notice served, if there's agreed, it's normally need to pay the rent to the landlord. So all that needs to be properly covered. So there is a lot on the compliance side. It's not just a question of I can make some easy money on a rent-to-rent. Need to take into account all these details. So how does it work? We've already touched on this rent-to-rent. So we've got the agreement with landlords to manage their property. We're paying a fixed rent to the landlord, and we've got generally there's an agreement to look after most of the internal maintenance and ongoing compliance in the property. So that means at the beginning we're making sure that, for example, all the fire alarms and emergency lighting is working. But then the person who takes on the contract must do the ongoing compliance, which is every month going and testing the fire alarms, having it properly certified every year, making sure the gas safety and electric safety is up to date, and all the in the case of HMO, it's like 6 monthly inspections of all the rooms. And then, yeah, how it works, subletting to tenants at a higher rate. And it really is creating a win-win for landlords and yourself, because there are opportunities, there are real opportunities for landlords who are like fed up of managing the property themselves, quite open to working with a trusted property, let's say property person who's active, interested in properly managing the property, and the landlord can be like quite happy with that. Generally, the aim is to agree with the landlord either market rent, or generally I'm advising a little bit below market rent, because if the landlord is managing it with doing it with an agent, the landlord will be paying probably the 15% management fee to the agent. And also when it's with an agent, any even small internal repairs, if a tap's leaking, for example, the agent will ask the landlord to pay for that. Every little thing, if there's like some electric light switch needs fixing. Whereas in the case of a rent-to-rent agreement, normally, and it's like as a little advantage to the landlord, we're taking care of all the main internal maintenance, and that obviously has a cost associated with it. So potentially, if we're taking off the 15% that even if the landlord was managing it himself, he understands it's quite a lot of hassle and it's worth that difference. So we could consider 15% management, probably 5% for the ongoing maintenance. So theoretically, we could argue with the landlord it's worth taking 20% off market rent, So if the market rent is 1,000, we could say to the landlord, look, it makes sense for us to pay you 800. That's what you'd be getting anyway, and this is going to be completely hassle-free. In practice, we might end up negotiating halfway between the two. So if market rent's 1,000, propose 900, and it's like a win-win for both parties. And what happens is when we've got these sources like proposing these in inverted commas great rent to rent deals, in order for them to get these deals, I'm not saying that obviously there are some that are really like sort of good and doing it like professionally, but there's also exceptions. They're going to a landlord and say, look, I'm going to give you more than market rent. Will you let me propose your property to an investor? So then the investor is ending up with a property because they haven't maybe got experience. They've gone on some forum and they're thinking it's a great deal. They're ending up paying more than market rent. They're paying for maintenance. If they're taking on an agent to deal with it, then that's on top. And at the end, it's is not a good deal really for anyone. So yeah, to make it a win-win, it needs to be generally a little bit below market value. And the idea is to explain to the landlord what are the advantages if he goes with like an experienced property person to look after the property. And that is how I haven't got when I started, I had quite a few rent to rents. I've still got probably half a dozen, but it's not my focus. And the ones that I've got, I'm like sort of happy with them because I'm paying a bit below market rent, and the landlords are happy with them as well because all they get is they get their rent every month from me, and they don't hear anything at all about the property because we're looking after it. So it can be a real win to win for both people. So this is how it works. So some of the key steps. This is obviously research the local market. Generally, rent to rent, it doesn't make sense if, for example, you live in, let's say, South London, to look for rent to rent up in Newcastle. Because if you're doing that, you're not going to be able to self-manage it. It's going to be with some local agent, and the potential benefits are very limited. So generally, it's going to be some area that's not too far away where it's possible to physically go to the property where necessary. Doesn't mean to say you can't do it like 30, 40, 50 minutes away, because it's possible to organize, for example, with local, like if you've got a cleaner nearby, if there's some little issue to have someone go round. But it's still best to be not that far away. Yeah, so to understand the local market, understand what the real rental demand is, what the market prices are, identify potential landlords and properties. It could be like tired HMOs that need a bit of work, possible to take on a rent to rent. One thing that yeah, it's not on the slides, but quite often we do also on the rent to serviced accommodation. If a property is in a bit of a state, we're not talking about big renovations, but it might not need redecorating, new carpets, proper furniture put in. Let's say the cost of like bringing it up to standard is maybe £3,000, and the monthly rent normally would be £1,000. Possible to agree with the landlord, say, look, I'm going to do all this work, but please give me 3 months rent free. And in reality, that can also be a win-win, because although it's 3,000 in cost, if it's generally, if you're well organized, you can get that work done in 2-3 weeks. So after the first month of rent free, then there's money coming in from the yeah, from the customers. So it can be a win-win. It is a way of sometimes doing a deal with the landlords. Third one, obviously, is to have in place the proper contracts. Then, obviously, we need to get the tenants in. So that's marketing the property to tenants or marketing it on Airbnb, booking.com. Generally as well, if you want to get good occupancy, especially on the serviced accommodation, we'll do a bit of social media marketing as well. Look for example, Facebook groups of contractors that are going to be staying in a particular area, if that's our market. And then, yeah, managing tenants and the ongoing property maintenance. So it's not really hands off, but it can be a good way of starting to get involved, but need you to like properly understand things before getting started. In other words, buy the detailed course. It's not just a question of buying the detailed course, but or some other way, really understanding how things work and making sure everything is in order before getting started. Rent to serviced accommodation, similar sort of thing, except that here we haven't got long-term tenancies, so there's no ASTs. We're renting out on short or medium term. We still have to have contracts. We need to have proper serviced accommodation contracts. We need to do proper checks. And generally, we need to be sure that we're renting to people that have got permanent addresses elsewhere. Because there is a danger with serviced accommodation that someone can end up booking, for example, on Airbnb for a week. Generally, when people booking, we're always contacting them saying, look, would you like to book directly with us? We can give you a slightly better rate than we're not paying the booking agency commissions. But we need to make sure we've got a proper contract in place, because otherwise we can end up with someone saying, look, this is my home. You don't have a right to evict me. I'm staying there forever, sort of thing. And yeah, you can end up, if you haven't checked the paperwork, made sure that someone's got a permanent address somewhere else, then you end up with an Airbnb that has become a non-paying long-term tenant that you have to deal with. And during all that time, it's needed, of course, to pay the landlord.
How does sorry Trevor, how does Airbnb navigate that, right? So because I if I use Airbnb for example, I'm not aware that I'm signing a contract per se, right? It's not that obvious to me, but how do they prevent that from happening, Airbnb themselves, or is it that they actually don't and everybody you book with potentially runs this risk?
It's a slightly grey area. The thing is, because Airbnb and Booking.com are clearly short-term booking sites, that if someone books via that site, it's easy to argue that they booked short-term accommodation. They and that a judge would say for sure they're not haven't been granted a an AST. However, if the danger is then you go into a direct agreement with that person without checking everything, and they're paying rather than via Airbnb, they're paying directly to your company bank account, then people can say it's my home, and can fairly fast get into problems. So the way around that is obviously to have the proper serviced accommodation contract, which is on legal terms a license to occupy, but also to have proof of address, which can be in the form of a bank statement or a council tax bill, where someone's proving that they have a permanent address somewhere else in the UK. So yeah, need to be careful about that, because one thing that we probably won't have time to touch on, so I'll cover it in 30 seconds or 1 minute now, is London and most all London boroughs, the 90-day rule. After the 90 days, it's needed to get find people that are going to stay for 3 months or more. So that's like medium-term contracts. Ideal targets, for example, corporate customers, someone coming from the USA to work for 6 months in the city who needs somewhere to stay. And another good market is this was quite a big market when I was doing serviced accommodation in London. People that have got a house in the suburbs and they're doing a renovation on their house and they need someone to somewhere to stay for a few months. There, if you got, for example, you just take proof that council tax, potentially mortgage statement, so you got proof that the person has got a permanent home, but they need somewhere for 3 or 4 months, or it could be the same if it's an insurance claim, so they've got like fire damage or flood damage, and the people need to rent for a period of time during the repair of their home. But it's needed to be very careful about this. So we'll move on. So key steps on rent to serviced accommodation, similar to rent, find suitable locations, make sure it's an area where guests are going to be comfortable to stay. An area which might be fine for as an HMO might not be fine for tourists coming from abroad who might be coming from some peaceful district. If we're living in a city, we may be like used to like strange behavior outside on the streets that we don't even think about. But some people from other even areas of the country would be a bit concerned by that behavior. So identify suitable locations, negotiate appropriate agreements with landlords, or if you're a landlord, negotiate an appropriate agreement with the company that's doing a rent to serviced accommodation on your property. Furnishing and staging. Serviced accommodation is a complete business in itself with all the different operational procedures, cleaners, maintenance, guest flow and things. Then there's the marketing on the booking sites and managing bookings and guest experiences. Rent to serviced accommodation will very fast fall flat if there's a few bad reviews, because people are booking, so need to be really on top of not rush things and get guests in there when it's half ready, because then it'll take ages to get the review scores back to good level, and the bad ones are still going to be there. Obviously, there's are going to be from time to time bad reviews because some things go wrong, but need you to really deal with them. It's like you need to be sort of like dealing with people sort of thing to do this, or pay a management company to do it and choose one that's got a good reputation. Market trends in the UK. Obviously, we're talking about the UK. We're not talking about France or Spain or somewhere else. There is a rising demand for HMOs in urban areas, partly linked to the price of renting a one-bed flat or studio flat. A lot of people are looking to rent rooms and have a bit of money to be able to go to the theatre or something else. Renters' rights bills, obviously giving more rights to the renter, so need to take that into account in the contracts and evaluating the potential risks. Serviced accommodation still expanding, but there are areas which are becoming saturated, so both the positive and the downside. And also on serviced accommodation, the potential regulatory changes. There may be mandatory licensing coming in at some point in time, maybe 2 years, maybe longer. There might be new planning rules, so need to be sure generally that if you're setting up a rent to serviced accommodation contract with a landlord, that you've got some clause in there that if there's some regulations that prohibit the use of the property as serviced accommodation, that you have the right to hand back the property to the landlord. Common challenges and solutions. Landlord resistance to subletting, because typically if a landlord puts their property on, let's say, open rent, they're going to get 10 phone calls from people saying, can I rent your property and sublet? So needed to show serious, give references, give the appropriate guarantees, and not like go rushing in there saying everything's going to be great, but like, yeah, set up a proper dialogue with the potential landlords. Yeah, and the challenges of managing demand and fluctuations if it's serviced accommodation, and yeah, tenant management versus profitability. Obviously, we need to give people good environment to live in, but based on the income, maintenance, and looking after the properties, it's always yeah, a compromise of having the right standards, but not going over the top. And then the other challenge that we've already touched on, all the compliance and regulations that we need to be sure we're following correctly. Some tips for rent-to-rent success: yeah, building strong relationships with landlords, because if the idea is to make it into a business to scale up, then a lot of the new customers will be referrals. It could be like some particular even like community of people from maybe some specific origin, and they're recommending to their friends. Specifically on serviced accommodation, but also if tenants are have got good accommodation, more likely to attract good tenants, and tenants are likely to pay their bills. So yeah, so maintaining good standards on the properties. Tips for rent to serviced accommodation: professional photography and staging to be able to stand out on the booking sites, multiple booking platforms. As obviously all sorts of tools, channel managers and different things that we can use to optimize that. Yeah, and at the end of the day, making sure that guests have a good experience staying in the properties. Some very simple financial examples, which are probably realistic ones. So if we take a rent to rent, so rent to service, rent to HMO, paying 1,000, this could be, for example, I don't know, in some medium-sized city, it could be a 3-bedroom HMO, 1,200 rent to the landlord, each tenant paying £800 a month. So yeah, that makes up the 2,400. If we got our monthly costs all in without any management fees of 700, then we got a profit of 500 per month, which is the sort of thing that is reasonable to get. And I would say doing this should be the minimum to aim for. If it's going to be below that, there's no point. And rent to serviced. So obviously you see here, if one tenant stops paying, you're in the negative. So be careful of that. Be fairly sure that you're going to get, on this example, we need to be at least 80% occupancy to be making a bit of a profit. Obviously, if you've got 4 bedrooms, it's making it a little bit easier. So the larger the number of the bedrooms, the better it is. And then rent to serviced accommodation example, 1,400 for a nice, let's say a nice 1-bed flat in, again, like some provincial city. In London, we would double the rates. Nightly rate of 150. So at 20 nights occupancy, £3,000. Most likely got these £1,000 a month because we've got the utilities and the council tax, but we've got the cleaning, the fees that go to booking.com or Airbnb, guest supplies and things. So we've got £600 profit per month on this example. Obviously, if it's high season and we're charging higher rates and I've got like 80–90% occupancy, we might be doing £1,500 per month. And at low season, we might be doing 0. So we do have to take into account the fluctuations. Case studies, in reality, it's the previous slide. We're not going to give more on that. And then use of technology and tools to scale the business if we're doing serviced accommodation. channel managers for guest bookings, property management software, that's like primarily sending out the cleaners, logging maintenance and stuff like that. We can use, if we're in like a city, there are tools that we can use to adjust the prices, make sure we're not charging too much or too less, and proper tools for streamlining communication with the guests. Taxation and financial management is a business, so we need to be sure that we're properly accounting for tax and paying tax. So VAT, serviced accommodation, is subject to VAT. So if we're operating a business and we're above the threshold, which is £85,000, then we're charging VAT, recuperating it on expenses, but that can obviously eat into the profits. So we need to be aware of that. There are some schemes to optimize the VAT, like scheme called TOMS, which can work, but need to have obviously expert advice and a suitably qualified accountant that is dealing with that. So don't forget to take into account the tax issues, even on rent to rent. And it's basically everything related to tax on a normal business, so VAT, corporation tax, and yeah, and the standard business compliance. So yeah, building long-term relationships with landlords and making it a win-win situation. Think common pitfalls, how to avoid them. So skipping due diligence on properties. So taking into account all the figures that we mentioned, not thinking I want this deal, so I'm going to somehow fudge the Excel and make it a deal. If it's not a deal, walk away from it. Not dedicating time to look after tenants and guests. Yeah, and underestimating the costs and compliance. So summary, rent to serviced accommodation can be a good, let's say, starter for cash flow, but really only if like it's self-managed, and yeah, need to be committed to the time that it needs to do it, and to do it properly, and to properly analyze the deals. And that's the end of the overview of rent to rent and rent to serviced accommodation. And we've got 2 or 3 minutes if anyone does have any questions.
Trevor, for the rent to rent, do you need to be registered as a landlord or a letting agent, or in terms of the compliance element?
It will depend on local, it's not national requirement. It's a local requirement. So if it's even when it's Article 4, all Article 4 means is that the specific regulations in place in an area above and beyond the national statutory rules. Some areas have mandatory licensing even of single let properties, including used as HMO, but that might only require the landlord to be registered and not necessarily the agent. In Wales, for example, there's nationwide licensing requirements. There's a government organisation called Rent Smart Wales, and there is necessary both for the landlord to be registered. So that's relatively simple because it's just a question of declaration. And the managing agent must be registered and approved. In other words, they must have done training and mustn't be like convicted and have any like bad sort of really bad history sort of thing. And in that case, the person who has the rent to rent contract is the managing agent. So if it's an area in the UK which requires the agent to be registered for the property as well as the landlord, then that is required. Generally in England, not, is the general rule. Anyone can do it, because it's not in the case of rent to HMO, then there's the requirement to be, because we're looking after ASTs, the regulations that relate to letting agents apply. So it's needed to be registered with forgot what they're called, like a resolution scheme. Deposits need to be registered and approved, and there needs to be proper insurance in place. But it's relatively minimum. It's not needed to be a member of a professional body or anything like that. So yeah, and it's needed then, yeah, to be, in the case of an HMO, it's if it's one that's subject to licensing, either because of Article 4 or mandatory licensing. In some areas, it's either the landlord or the managing agent can be the registered for the as the having the HMO license. Because interestingly, Ope is on this call, and we're looking at helping a bit on some sorting out an HMO that he has in Liverpool. And in Liverpool, for example, either the landlord, so the owner of the property, or the agent can be the person that takes the license. The thing is, a license is not transferable. So in this case, it would make sense for Ope, as the owner of the property, to have the license. But when appointing a management agent, to have within the contract for the managing agent that the managing agent is responsible for all the compliance issues. In reality, what that means is, if there's a problem, the council would go to Ope and say, look, your property is not has got a problem. But then, because Ope would have a legal contract between himself and the managing agent, if the council were to issue a fine to Ope, he could go to, say, the management agent and say, look, we've got an agreement, you haven't done what you should, you must pay me and be responsible for the loss of income because of your not managing correctly the property. So there are these considerations to take into account. And some of these considerations also are applying if, depending on which side you are of the, if you're on the property owner side and looking to have it managed, sometimes a rent-to-rent agreement can be an attractive solution, as long as everything, because on the rent-to-rent, if you're confident that the property person is reliable, has got good references, you might prefer to, and if it's like an honest deal, the property person might be paying a little bit below market rent, but the landlord has the assurance that everything's going to be taken care of, and you can like sort of forget about it. Whereas potentially there might be a little bit more to be earned from using a managing agent, or if it's someone that is nearby and is happy to self-manage it, obviously there's more to be earned.
Have you got any suggestions or recommendations on how you show credibility if this is your first property that you're managing?
Yes, probably there. Um, if you've got none at all, I mean, I know in your case, Vatsal, that you got your own properties or you're doing other things. So part of the credibility can come from that. The other thing is to actually explain and demonstrate, not by showing off, but in the conversation, that you've got the proper knowledge of what the the compliances, you're going through the potential risks, and that, for example, if you're going to do a rent to HMO, you're going to be upfront with the owner saying, look, we've got a problem with this renters' rights bill. We're agreeing to, I'm proposing a 3-year or a 5-year contract. We've got tenants in there. This is what can happen. Let's make sure that we're both protected and we've got in place the best solution at the end of it. And if you're putting all that on the table and talking about it professionally, then that's fine. Potentially, this is obviously a bit of a risky one. You might want to propose some sort of limited personal guarantee on the deal. Or if you are the landlord and you're dealing with someone maybe who doesn't have experience, you might say, I'm happy giving you the deal, but I want you to give me a personal guarantee that if something happens, you will be personally responsible, maybe up to a certain amount, for example. So that also can be a way of getting around it as well.
Yeah.
Yeah, and some people will want the experience, and in which case then there's sort of no way around it. But generally people will prefer like a professional approach. And if you're upright and someone says how many you're managing, and if it's 0, say I've got property experience, I know how it works, but this is going to be my first one, then it can be fine. Just be
Yeah.
open and upfront about it. Any other questions? Good. Well, thank you for your time. I hope that was beneficial. And yeah, the recording is going to be available to everyone. And next week, I don't remember what we have next week. I think it's the alternatives to a standard buy-to-let. So in other words, some of the in things, what is um, social housing, supported living, and the different, and also standard let can be operated as a mini, potentially as a mini HMO. So yeah, what are the alternatives to operating a house or a flat as a standard let?
Okay.
Right, well, have a good evening.
Thanks for
Cheers, Trevor. Cheers,
Yeah.
guys. Thank you.
Yeah.
Yeah.
Take
Bye.
care.
Bye.
Bye.